How's it going, everyone? If you clicked on this video, it's because you've been struggling trading ICT. And today I will show you how to actually trade ICT, differentiate different trend markets versus range markets, and I will provide some examples. This here is a 6-hour trade that I managed to catch live inside the Rake Trades network, right? I trade every single day from 1:30 to 3:30 p.m. Eastern time on the Rake Trades channel. So let's get straight into it. First, how to actually trade ICT. I caught this 6-hour trade live. Closed out a little bit under 10R last week and all done live PM session apart from my morning AM session. So I know what I'm talking about. First, let's hop into how to actually trade ICT, right? Markets will trade one of two ways. By the way, guys, this is gonna be fully not cut, trying to stay under 10 minutes. So bear with me. Markets will do one of two things, right? They will create higher highs or higher lows, right? Where would they retrace back into? Fair value gaps, right? Or order blocks. Vice versa to the downside. I don't have to draw it again. Or they will range, right? If you understand this basic principle with fair value gaps and order blocks, um, it puts you at an advantage, right? Now, if per se the higher time frame is uptrending and we get to an area of range, so say we're creating higher highs, higher lows on the 4 hour and on the daily and 4 hour, but on the hourly we begin to range, right? This is the hourly now. We begin to range. Given that the higher time frame is bullish, what I would look for is a break of the lows, right? Or a liquidity rate to then trade back into either the opposite end of the range or halfway of the range or some sort of like bearish fair value gap, bearish order block inside of premium of this leg, right? And I'll go over premium and discount. So you have trend markets, you have range markets. Now you got that we got that out the way, right? Trend and range. In trending markets, you want to essentially aim for the swing highs, and range markets you want to scalp, be in scout mode essentially. How to trade ICT essentially. Look for fair value gaps, look for order blocks in conjunction with multi-time frame analysis, right? So first thing I do, and again, I'll go over examples here towards the end, so bear with me. What I look for every single morning is I want to get a direction on the higher time frame, right? So direction on the weekly. So let's do weekly and daily. The 4 hour and 1 hour. I want to see confirmation. 15-minute / 5-minute / 1-minute entry pocket, right? It's not always this picture perfect, right? Because sometimes the daily and the weekly might be uptrending, but we're on the 4 hour, 1 hour. We're pulling into a weekly bullish fair value gap per se, right? So the weekly is bullish. The daily perhaps might be bullish, but we have a swing low right in the weekly fair value gap. So on the 4 hour, we might be delivering bearish, 15 5-minute bearish. And the target for the day is that weekly gap entry, right? So it's aligning all these different time frames. So for me, I use the weekly, daily, 4 hour, 1 hour, 15-minute, 5-minute, 1 minute, right? So let's hit straight into examples, right? On a random example, let's see. Random example for all that BS, right? Back into start new. Maybe that's a bad example. We're at all-time highs. Let's go to somewhere in this range. So first thing I would do is essentially go on the daily. I want to see where the daily is headed towards, where the weekly and daily is headed towards, right? So we're currently delivering at this point. I guess the monthlies come in use here. We took out relative equal lows. We're trading higher. We're now inverting that bearish gap here. So all these, I'll mark it out just for example purposes. We have that. We're displacing higher into this bearish fair value gap here on the weekly. So we're essentially disrespecting bearish order flow and respecting bullish order flow. One thing I'm noting is that we are in premium of the range. So if we take swing high to swing low on the higher time frames, right? We are in premium of the range. So that's one thing to consider. But considering everything else, we're bullish on the monthly, weekly, daily. We just took out prior day high. So let's see. The next draw would be this gap entry here, weekly. So yeah, that's the next level gap entry. So I typically look for gap entries and gap fills as targets, Um, we have these relative equal highs over here. This is a random date, by the way. So those are two targets to the left of us. The hourly, let's see. Let's go look at the hourly. So same relative equal highs here that I would use as targets. Essentially, even use that level as a target. So now that I have a overall bias and I have levels up ahead, swing high, of course, always, always, always. So now fair value gaps and order blocks. If you haven't used them yet, this might not be the best video. This is more if you've already been trading ICT, but you're still struggling, right? We have a fair value gap here. We have relative or lows down below us. We're delivering bullish. The daily is not giving us much action. We took out prior day highs and we're trading above it. By the way, I don't know what time it is either. It's 11 p.m. So perfect PM session. We took out lows, bullish fair value gap. We have some order blocks to the left of us. The 1 hour again took out lows, another fair value gap down here on the hourly. So we have an hourly fair value gap, a 4 hour fair value gap overlapping. We have at this point, I wouldn't anticipate price going to discount, right? Because we have quote unquote support with displacement. So even if we take this swing low to swing high, discount is way below this area. I wouldn't anticipate us going there because of our prices trading at currently. We have two overlapping signals thus far, right? Now, if I was looking at this for a potential area of interest, I would take premium discount and look to target premium of the range, a swing high, or a fair value gap, right? Unmitigated fair value gap. So let's see, 4 hour, 30, 15 minutes. So in this case, a good target would be, I guess the low hanging fruit here would be this um, bearish fair value gap here on the 15-minute. FEG premium PD array, whereas the more obvious one would be London highs or specifically the swing high, right? So 4 hours essentially delivering bullish. The let's see, when did the four? Oh, this is early. This is at 2 a.m. So this is quite interesting. 2 a.m. At that point, the hourly is delivering bearish, but it doesn't matter. What I'd be looking for here is a 15-minute change in state or invert. So we're getting the invert here, right? Let's go back to 1 minute. Oh, I guess it does not that because we went way, way back. How's the 5 minute looking here? I don't look at the 1 minute until the point of entry, right? So let's fast forward here. We retrace back down 15-minute. Where did the 15-minute retrace down into? That 1 minute or that 5 minute, sorry, the 15-minute order block. Let's see if we rebalanced. Cool. Let's see. Fast forward. Okay. Do we invert that? Okay, we inverted that small little bearish gap there. At that point, cool. At this point, we have a bearish gap that's been unmitigated here, right? Which I would argue that would be a very, very low hanging fruit that you can aim for. It's below discount. We already took out essentially liquidity. We traded into a 4 hour, 1 hour fair value gap. 15-minute inverted this bearish gap after rejecting this bearish order block. We inverted. Where do we trade back down into? I would guess it's close to discount, right? Literally to discount of the range. Now we're trading higher. So price is delivering to the upside. Everything is aligning. Order flow is confirming it on the now at this point I would zoom in on the 1 minute. Oh, at this point I can't zoom in on the 1 minute given it's too far back. This was last year, literally about a year ago. So I would take something, assuming there's like a 1 minute change in state, 1 minute invert fair value gap. I don't know what there is, but that's somewhat of the trade I would take essentially for a 2.3 hour trade. And this is at 3 a.m., right? Random time. Random time. Would you look at that? We traded straight into premium of the range. And this is by no means handpicked. You can't literally make this up, right? Boom, boom. Let's go to a random date. One more. Let's do one more example. Random date. Let's do, boom. Let's do something a little bit harder. Let's do something here, right? So same thing, top-down analysis. What is the weekly doing? And this is probably gonna be a little longer than 10 minutes. It's already been 11, so gonna aim to be under 20. Uh, this is crazy volatility. Let's see. So again, start. I don't know where we're at. So monthly. Um, okay, weekly. Let's start on the weekly. So the weekly has been displacing lower. Okay, this was COVID time. The daily we have lows down below us, relative equal lows to be exact, that we took. Actually, I don't like this volatility. Let me pick a different day. A different day with that's a little bit more closer to us. We'll do start new. Let's do this one random. Okay, on the 2024 August. So we just took out lows. Monthly, how's the monthly looking? The monthly is delivering bullish at this bullish order block, right? So I'm compiling clues. I'm compiling clues and data to come about a trade idea. Took out swing lows on the weekly. At this point, I would be looking for premium of the range as a potential target. The weekly, we have this bearish gap up above us. The daily, how's the daily? So an obvious draw for me would be the daily swing high. This is an obvious premium of the range on the higher time frame. So let's do premium PDA. We have a bearish fair value gap here. So in this example, I'll try to keep it as high time frame as possible. That way, there's not much zooming in, right? So assuming the lowest time frame we went into was the hourly, and given that the monthly bullish order block, the weekly took out lows, I would anticipate price to at least trade up to premium of the range on the daily, which is that swing high, right? So on the 4 hour, let's see, we're rebalancing, we're rejecting bearish order flow. We're disrespecting bearish fair value gaps here as well, respecting bullish fair value gaps. So and then we have a daily bearish fair value gap here that I just highlighted, right? So at this point, let's see. We're bullish, bullish. Okay, at this point, boom, right? I wouldn't necessarily be longing this, but my draw would immediately go to premium of the range. Why? Because price trades from discount to premium. So now that we get to premium, this whole move up, right? Intraday, we have different sessions, different days, right? This is on Wednesday, Friday. This was whatever. But if the higher time frame aligns intraday, I'm looking to put on size. I'm looking to put on risk, targeting premium, the range of the higher time frame, right? To summarize, price rebalances to a fair value gap, to equilibrium of the range, to an order block. And then once price does get rebalanced, it'll more than likely take out the extreme, the swing high. In range trading markets, meaning when price takes out the high, then the low, then the high, then the low, you want to be trading with the direction of the overall higher time frame bias, right? The higher time frame is saying go up, fade the lows in ranging market conditions. Today is a perfect example of that. Today is June 17th of 2026. FOMC, short every pop, short it into either equilibrium or the other extreme, right? So yeah, for those that stayed for the whole video, appreciate you tons. I trade live every single day, Monday through Friday, 1:30 to 3:30 p.m. Eastern. If you want to tune in on the Rate Trades channel, right? So tune in for that. And like always, make sure you like, comment, and subscribe, and I'll see you on the next one.